So this past few weeks, we've actually seen a lot of earnings season. We are gonna describe who passed earnings with flying colors. So far, these are the companies that passed these earnings reports very, very well. You've got Chegg, you've got Fiven, you've got Beyond Meat, Activision, Mercado Libre, Electronic Arts, Shopify, PayPal, Square, Etsy, even Peloton, Twilio, even Uber, Cloudflare, Moderna, Datadog, Innovio, Novavax, Wix, New Relic, Skyworks. Now, who failed earnings? These are the failures. Disney, Shake Shack, Pinterest, Texas Roadhouse, Roku, The Trade Desk, Booking.com, SeaWorld Entertainment, Under Armour, Sony, Smile Direct Club, Tyson, One Medical. Now, if you go through the charts, you could see that most of the good earnings went up very, very strongly in the last few days. So this is your check after earnings season from about 44, now it's trading at 65. That is a that move after earnings calls. This is your Wix.com. Prior to earnings, it was already rising from about 80, now it's 189. Before earnings, it was already trading 100% at 160. Now you're seeing it continuously going up. New Relic just reported earnings, quite a good move. Actually, there's still a possible V-shaped move. From 35, could it go 70? From the way that earnings movers that are passing, the answer is yes. Novavax, it went up after earnings from about 16 or 20. Now it's about 40. That's 100% pop. Datadog, we've seen the earnings call from about 50. Now it's 30% at 65. It went as high as 72 after earnings. Innovio, after earnings from about 10, it rose to about 1365. 59, good earnings from about 88, it's about 103. We're seeing Twilio after earnings from about 120, now it's 190. Spectacular 50%, 100% moves after earnings. Peloton goes from about 34 to 45. Moderna, it's now trading after earnings from 48 to 64. This was around, even just last month, April, it was already trading just at 20. This is about 3x since then, or about more than 5x for the year. Activision Blizzard games. So after earnings call, also up, it's 72 now, still strong. Uber Technologies went on the upside after earnings and also had the call that they are transitioning to buy Grubhub, which is a food delivery app. They're trying to be more food and delivery and logistics more than transporting people. Electronic Arts, also a good move. After earnings, no 50% moves, but still on the way up with an uptrend. Mercado Libre, of course, after the great earnings from about 600, it's now trading at 780. That's a 30% pop. Cloudflare after earnings from 23 to 28. Shopify from earnings of about 680, it's about 750 or still 10% higher. Beyond Meat, after that earnings call from about 90, now it's about 135. That's about a 50% move. Enphase Energy trading from 44 at 56, still higher at about 30-40%. 5-9, after the earnings call was also up. That's an all-time high. PayPal, after earnings, you've seen it explode. New highs, all-time highs at about 144 from 124. This is a V-shaped move, 80% from March lows. Square, after earnings, also continuously uptrend. It's 105% from the lows since March. Etsy, continuous up after earnings call from about 73, now 10% higher at 81. Now, for the bad earnings, you've seen Walt Disney 90% down on income, but after earnings, the stock is just unchanged. It didn't fall 20%, it didn't go up, but unchanged. Shake Shack, also bad earnings, didn't fall 20%, fell a bit to 48, but it's still higher than your March lows of about 32. This is still 50% higher than your March. Texas Roadhouse, not a good earnings call, but still at 44. This is still about 28 to 44 is about 50% higher. Roku, even after a bad advertising revenue segment, just down about 10% after earnings call, 140 to 116. The trade desk, after a bad earnings from about 320 to 297, that's still just 10% of the highs. Booking Holdings, bad earnings, hospitality industry is bad, fell a bit about from 1.5 to 1.3. That's a 20% drop, but still from the lows, still higher. SeaWorld, nobody's going to theme parks, 16 to 12, significantly down, but still above your March lows. On actually bad earnings, but from 23, it actually managed to move up to 29, larger than expected losses, but still in the healthcare insurance zone. So people bought it up after earnings call within the day. That's from 23 to close 29, or about 20% higher intraday. Sony Corporation had a gap down after earnings. It wasn't as good as people expected. Quite surprising from a gaming company, a gaming entertainment conglomerate. But yeah, it's down about 5% from its current peak. Tyson Foods, you have meat shortage. It's unchanged here at 59. It's still significantly down for the year, but we can see that it's not falling down back to your March lows. Who's your next earnings call this week, next coming weeks? These are the ones that I think are most important. NVIDIA, May 21, Walmart, May 19, Zoom Video, June 2, JD.com, May 15, that is tonight, Alibaba, May 22, that is next week, next Friday, Baidu is next Monday, May 18, Endava, May 21, Sea Limited, next week, Monday, May 18. These 8 companies, we expect them to be actually on the positive side. Now, let's understand who Endava is. Endava PLC, okay, Endava, this is the chart. Endava is actually a company that just got listed 2018. Nobody knows who Endava is, so I'm here to actually present who this company is. It's at 43 right now. It surged about 40% from its 50% from its March lows, just in tandem with the market. Can it hit 55? Can it go all-time highs? Okay, wake up. So Endava is a publicly listed software development company founded in 2000, 20 years ago in London, UK. It provides digital transformation consulting, agile software development services, and various automation solutions. Their offices are located across North America, Western Europe, with nearshore delivery centers along Central and Eastern Europe, such as Romania, Moldova, Bulgaria, Serbia, Macedonia, and Latin America, Argentina, Uruguay, Venezuela, and Colombia. Now, Endava PLC has clients in the following industries: payments, financial services, consumer products, retail, logistics, and healthcare. In those 20 years, they have grown from about 60 employees to around 6,267 employees located in those multiple offices around the world. So using distributed enterprise agile at scale, Endava collaborates with clients, integrating with their teams, catalyzing ideation, and delivering robust solutions. Endava helps its clients become digital experience-driven businesses, assisting them in their journey from idea generation to development, deployment of products, platforms, and solutions. Now, as you can see, for the last 6 years, their revenues have grown well in pounds, since this is in UK, but this is listed in USA. It's a UK company listed in USA. Revenues have been rising, and so does earnings. Okay, some of their awards. Endava was presented with the Project of the Year award for their Pollinate merchant acquiring platform. So a couple of things, Endava and Pollinate have been awarded for their cutting-edge, bank-grade digital solution, allowing banks to reimagine acquiring and value-added services for small and medium enterprises. So they were determined to actually, this bank was determined to have a merchant acquiring platform for banks through small, medium enterprises. The Pollinate platform is built with Microsoft Azure using the latest data and AI offerings. Merchant or onboarding took 24 hours, and loyalty scheme, real-time intent tools for open banking ready. They are proud to be awarded for their for being recognized for their IT projects and for even winning the award. Wait up. A couple of things that you could see on their success story, some of their clients. So that's Pollinate, reinventing merchant acquisition for the banks. They have education clients. They're improving the vocational program through cloud-based platform with Endava. How do they help healthcare? They improve customer satisfaction with Endava. They have clients in insurance firms, increasing agility and innovation with Endava. Of course, payments is one of their best awards. They have they transform the leading payments provider, transforming it into an agile business. They have clients in with banks, global asset and wealth management firms taking the first step into the cloud with Endava. They have these clients, digital evolution. These are their success stories, accelerating technology for several digital, not digital savvy industries to help them for the world. They were able to build contactless payment solution from idea to production. So you could see all the awards that they have: healthcare, banking, and retail, telco media, premium watch brand enhances customer experience with Endava. So as you could see, this company is actually started February 8, 2000, the millennium. So during that time, this company has been growing their clients, and really their fast relationships with people and technology has allowed their company to be a consultant and really enable so many clients being referred by word of mouth until they became so big. So one of their clients has actually achieved 300% higher sales through digital evolution. Now this one was for a leader in luxury apparel and accessories. They were doing this prior to COVID, and so these achievements have been done before COVID. And so we think that because everybody is going digital, a digital consultant firm who is in the lead will always increase their clients, especially through a pandemic. So example, Endava approached this luxury brand, helping them, of course, to bridge both their e-commerce, brick and mortar segments. They handled the in-store retail experience, the online interaction, generating 300% higher sales and customer engagement and brand awareness. Endava, throughout the years, acquired also several companies. In this news, we saw Endava acquiring German digital agency XOZ. XOZ focused on digital transformation to German-speaking talent. This company has 156 employees based in Germany and Austria, and so they are doing the consulting, design, implementation, and technical innovation, mostly for German and Austrian clients. One of the major questions that I really have to ask you is, based on the earnings front, you could see that the world has changed, and have you adapted? We're going to go through all the companies. These are all no-brainers. Everybody knows why e-commerce is a very, very strong sector, and it is not a question why, you know, we've seen the earnings front for e-commerce go all-time highs. So as you could see, even if everyone in the world keeps on talking about extraordinary increases in e-commerce, we don't see any problem. Take a look when we kept on saying buy at 400 for Mercado Libre. Now it's at about 770. So we don't see any declines. Actually, all of our e-commerce picks are doing so well. ZTO is now trading at about 32. Pintuoto is already trading at about 59, nearing 60. And these were just a few weeks ago. JD, I think, is already trading at 48, 49, even before earnings next week. So there is no change in views. We're gonna continue our sector plays. We will be bullish on Walmart, Kroger, eBay, Alibaba. You know, Alibaba is gonna report earnings next week. So Amazon is at 2.4. Etsy is now at $80. No changes in view. Shopee SE is now at about 63, 62. We still see it going higher. Farfetch is actually already trading at $16. Earnings call was also good. So e-commerce, retail, and e-commerce should do very well. Pinterest fell to 16. That was obvious because they were still relying on advertising revenue. So any company that solely needs advertising revenue could always fall. Ocado is already trading at 2.1. Okay, so if we're gonna try to study our companies for the week, we could really see that there is a definite reason why these companies have been doing well. Let's take a look at on your winners. On your winners, you could see the sectors are very, very clear. Chegg is on online education. Biden is on your cloud. Beyond Meat was a beneficiary because you have meat shortage due to the closing of meat processing plants. So that would be a short-term spike for plant meat, but it can also encourage some people who didn't want to buy plant-based meat. And so you're seeing that attention to that company. Now, of course, contactless payments, that's an obvious normal winner. PayPal and Square did so well. Shopify, Etsy, Melly. So I mean, if you notice, all of the e-commerce names went up. All of the game-related names have gone up. So if you're gonna make a bet for next week, these 8 are what you wanna pay attention onto. These 8. Why? NVIDIA is on your gaming sector, Walmart is on your supermarkets, Zoom video continuously gonna go higher. Would there be a sell on you? So far, as you could see from all the earnings releases that I've been sharing you, in the USA, all the great companies are just becoming greater. And so normally you'd actually see a 10% pop on the earnings rather than a drop. There's no sell on news. I don't see anything weak. There's no weakness in the USA if you're in the right companies. Now, Alibaba and Baidu are your cloud and e-commerce plays, also artificial intelligence. We're seeing that these are potential buys. JD is in the e-commerce. Now, some of you might think that all of them have risen. Can they go higher? So far, as you could see from these charts, even when you were buying Etsy at about 73 prior to earnings call, it still went up 10% afterwards. So we haven't seen the V-shaped all-time high move stop. Like assume that you're in PayPal and you're waiting for the earnings call. You might have sold somewhere at 124, 128, thinking that, okay, that's a V-shaped move from 84. Lo and behold, you've got a gap up. Similarly, you're seeing, okay, Enphase Energy is a renewable play. So you could see that the way the US is moving is that they are very much embracing how the world has thoroughly changed. Cloudflare is your cloud play. We've seen that. That's why we were betting that Datadog would do so well. And lo and behold, you know, Datadog went up 30%. Now, what is the takeaway from all these great moves in the USA? What you could say is that it is very clear that you don't want to sell your winners, no matter if the US or any headline tells you strong job losses, strong unemployment claims. I mean, everyone would say, oh, it's expensive, it's expensive. But As you could see from the price action, this is very clear. When you are passing, you are a passer. You've passed the earnings with flying colors. There is no reason for you not to just go in. All of these will become on dips, say 5 to 10% drops. You buy because the secular trend is intact. For New Relic, this is also a cloud play. Will it go to 70? My guess is yes. Any drop at about 55, seeing how the sector of the right companies are moving, you have no reason to sell. There is no, I've been getting questions, should I sell Mercado Libre? Should I sell Ocado? Should I sell these e-commerce names? Should I start to sell Amazon? When you look at price action, there is no reason to tell you to sell. They are all strong. I would say that people who didn't enter or didn't believe in these rallies would want to wait even on the gap ups. As you could see, Twilio is chatbots. I'm gonna share to you as well these. I'm gonna share to you a presentation. Wait up. Let me share to you a presentation of Endava, as that is gonna be an earnings call next week. Endava. Okay, let's go to this. Okay, so for most people, nobody is probably aware of who Endava is. You take a look in their investor presentations. Who's Endava? They're a consultant in the traditional IT. They're a pure play next-gen technology company. The digitalization transformation is growing 15%, and they are serving a very large addressable market. With the COVID, maybe this 800 billion 2023 goal is actually already about 2020 or 2021, or it's becoming growing more than 15%. This company is very close to their clients. They have everywhere from Western Europe, Central Europe, Latin America, North America, and they have available offices, Romania, Bulgaria, and so forth. As you can see, this was founded in 2000. In 20 years, they have significantly grown their company from just a UK IT consultancy to a company that has lens into Germany, USA, Latin America. They expanded all throughout the world. And from 60 employees, they 100x. That's 6,000 employees so far. They just did their IPO, New York Stock Exchange, July 2018. This tells you that IT segment is really, really important. They have their clients engaging in digitally. They're more responsive, so they're helping their clients to become agile, and they want their clients more efficient automation. As you could see, in this week, I actually explained how Baidu was making all of the companies such as Walmart, so they do it through artificial intelligence, and they do it with a lot of automation, such as convenience stores, self-driving delivery cars. So from idea to production, you could see that we really are in an intelligent economy. So far, they are projecting that in terms of technology, disruption waves, and convergence, we are still here at the infancy zone. There is still a long time for us to help the banks, help payments grow, help healthcare, help the retail, and help logistics. So this is a company that is trying to help these segments become more digital. And of course, COVID all throughout the world is helping these trends only become stronger. That is why when you look at the pastors and the strong earnings of these companies, it is not a joke. It's not about expensive or valuation. There is no choice. You have to have contactless payments. How could you deny PayPal or Square the growth when it is just really gonna be there forever? So as you could see, one of the best opportunities that they feel is important is that biometrics, chatbots, blockchain, frictionless payments, these are actually very, very strong, and the domain expertise of Endava is there. They actually help banks to become more digital. They actually help them to do biometrics, doing facial recognition. when you're having this social distancing world, you don't want to go to a bank, you don't want to go to a, everybody has to stay at home. As you could see, this company, Endava, has been growing their revenues in the last 5 years from $80 million to about $287 million. And their earnings has also, of course, grown with that increase in revenue. Given that the company's revenue is generated from existing clients, you could see that they have very high customer satisfaction, and it's only gonna grow about that is an impressive CAGR, 36%. So can we see this going to about $600 million with a CAGR of 36%? That means that within the next 2 to 3 years, that's very possible. So that means that revenues, earnings would increase. This is a growth company. Similarly, in that 5 years time, of course, their profits after tax doubled. And so you see that same CAGR, same compounded annual growth rate for an IT company. As they've increased their revenues, as they increase their clients, their top client revenue has also shrank from about 66% to 38%, meaning they are able to actually have a very diversified big client base so that they don't have to rely on one single big client for the bulk of their revenues. So their clients that are greater than greater than £1 million is actually very, very big at about 63 from about 18. That means that they are able to get the largest of the large UK companies all over the world, not just UK. So average spend is quite impressive at about £10 million a year. This means that most of their clients are actually top caliber. It's not your small, medium-sized enterprises. And majority of their revenues are based on payments and financial services, technology and media telecommunications, with the bulk of it from UK. So definitely, they're 45% UK, 23% Europe, 29% North America. So it's a very good company. Capex is sort the normal 7 million. That's just about 3% from their $300 million revenue. Adjusted free cash flow is very strong, so they have a very strong balance sheet. Yeah, so actually, why did we share companies that are in the IT field? It's because pretty much in this new world, what you have to think about in your portfolio is your portfolio COVID-proof? If you hold COVID-proof names, then you should have no problems at all. You should see any drops from the market to actually be a chance to buy. You should actually ask yourself, is the company already ready for the COVID world? An example that I want to share, which I actually already explained to my students this week, was actually Nike. We explained Nike's D2C, direct-to-consumer strategy, and we actually gave an entry point for Nike at about 85. So let's assume that Nike even goes down to 77. We are actually confident to buy companies that we know. So I suggest that you ask yourself if the company has become very strong in their digital efforts. Are they e-commerce friendly? And are they able to handle direct-to-consumer marketing? For Nike, it's been there since 2017. They have that direct-to-consumer offensive strategy. So what you could see here is that because they are that kind of company, you could see that Nike is able to stay strong here at 84.31. It even bounced strongly at 86.55. I wouldn't be surprised it actually hits 91 or 92, given that the way that the market is behaving, there is nothing bearish in the USA. I don't see anything bearish. I actually see more bullishness rather than bearishness. Now, my presentation is quite short, but the only takeaway that I could tell you is that based on your earnings calls, you have no question on it's no question on what companies will become all-time highs next week. So if NVIDIA gives you any entry at about 300, you should take advantage because NVIDIA will be a no-brainer all-time high. You have the data centers that are all going to be using NVIDIA. You have Microsoft Azure and Amazon Web Services all using NVIDIA data centers. And you already have the clue that all the cloud-based companies have been going all-time highs. So it's not a problem that NVIDIA will just continue going all-time highs. Could NVIDIA be a $400 company within a week? I'm not sure, but I mean, whether it happens within a week or within 2 months or within 3 months, the trend or the secular move is really on the way up. So we can definitely see e-commerce companies, cloud companies to be very strong. Alibaba is actually giving us a very good risk reward. I mentioned buying at 195. It's now a bounce at 201. Can it go to 215, 220? I would say yes, because from a cloud perspective, there's only about 4 companies in China. Sorry, there's just 3 companies in China that are handling cloud. It would be Alibaba, it would be Tencent, and Baidu. Of course, we're saying also that Baidu is very strong at what's this? We know that currently the core income or the core revenues of Baidu is still going through a lot of advertising revenues. But at 95, 92, 96, this is a buying opportunity. We think that the artificial intelligence efforts, all the automation, all of that fast forward technology, cloud, would enable Baidu to actually recover, go back to 114, go back to 120. And it's not it's not a glimmer of hope that it could actually rise back to 150. So with the risk reward, that is a great opportunity. We have been seeing that makeup is a very strong consumer demand, e-commerce. Estee Lauder has 1,700 online websites. So these are companies that we believe in. This drop at 160, 157 is an opportunity to buy. Will it go to 176? Yes. Will it go to 200? Yes. It will take a longer time because these companies are perceived as traditional retail. It takes a longer time for people to see the numbers, for them to see that, okay, non-essentials are actually not really as bad as it looks. Because once you look at the data, even the SE, even Shopee, with goods that they're selling is actually fashion, makeup, clothing. So I mean, so far we're seeing that data, and so you have to be a little bit more fast forward thinking and really looking at the trends that's happening all throughout the world. Are there questions, or should we? Yeah, so actually I want to share our website because we have been publishing a lot of videos. We have our YouTube, awesome10x.com. We don't just cover the Philippines, we actually trade globally. That allows us to see the world at a better picture. We can buy companies like Starbucks, Nike, and also companies like Datadog, Twilio, Fastly. So what I want most people to do is just go to Awesome10x. You can buy companies that are e-commerce friendly, subscribe, and click the bell so that you have all the notifications. We always have the free live updates every day for the Philippine market, 1 p.m. And every Friday, 5:30 p.m. You can just go through all the videos. We talk about companies, and this will allow you to learn a lot of things about the world just by looking at their company corporate numbers. So I hope that you've learned a lot. And hopefully, for Filipinos who are not aware, you don't need a lot of money. You can open an account abroad. We are not affiliated. I am not affiliated with Interactive Brokers. You can open an account anywhere. Interactive Brokers, Charles Schwab, Ameritrade, E-Trade. These are already one of the decades and decades of proven resilient, so you don't have to worry about them blowing up. So Interactive Brokers is actually my preferred choice because it's a dollar fixed fee. I'm able to buy all companies that I like around the world, and it helps. I mean, I can choose the sectors I want. So definitely, e-commerce plays a huge role. E-commerce plays a huge role in our lives. These companies on any dips would continue to be a buy. Will they dip? That is a question in most people's minds. Is it too expensive? I would say that, okay, it is expensive, but I really wouldn't know the top. So for those who want to wait it out, you could always wait. Or just, you can also check about the bad stocks, companies that are bad in the, they are in a bad sector, but we think that they have direct-to-consumer initiatives that could help them recover. For instance, Starbucks is a considered bad company because it's in the retail sector, it's in a social distancing victim. They are only operating through through takeouts and deliveries. But as you could see, you have a strong support at 70 and a stronger support at 65. This is almost a 50% rally from 50 to 80. It will take some time, but the growth in China for Starbucks, for Nike, and Estee Lauder are actually companies that we actually would buy from a contrarian perspective. And I mean, of course, with Disneyland, Shanghai opening May 11, 30% capacity. If Disney falls near 95 or 87, you do have an opportunity to buy some bad companies at a discount. Yeah, so those are a few things that you want to know about. Let's, if there aren't any questions, we can end.
Yeah. Any questions from the class?
Yeah, so we're actually still bullish the USA. No, I don't see any problem in any of the stocks, even for the bad companies. Okay, let's try to talk about some bad companies. No, for bad company picks, we talked about Shentra, we talked about InMode. As you could see, no, there's just really volatility, but from a longer term perspective, Shentra is on an uptrend from $1 to about $3. That's 150% move. So we are seeing also that even intraday, Shentra has actually more buyers at 240 below. So here I've been drawing supports. 240 is a support. You see some sellers at 285, but that's a 20% move just in an intraday perspective. For teledentistry, yes, Smile Direct Club had a bad earnings, higher losses than expected. But Smile Dentistry, it's still as you could see on the video a while ago, the world is going through virtual health, virtual telemedicine. Even for dentistry, you want to actually connect with your dentist online. And Smile Direct Club has the patents for all the American Dental Association. So I would say that any drops of Smile Direct Club is actually still a buy. You could see that this gap up from about 6 was just retested last night at 6:30, bounced to 750, 770, made a drop at 7, but that is still significantly higher. That is like 40, 50, no, that is actually 100% higher from the lows. Your lows are about 397 and 4. So that's still 4 to 7. That's significantly higher. So we are seeing actually a strong recovery in a lot of names, even surgeries. So actually, talk about Shentra. Shentra is a medical aesthetic play. This is for doctors who operate for women or gays who want treatment. Now for InMode, this is more like a Vicky Bella of the world, does machines. It's an Israeli company that sells machines all throughout the world to help non-invasive surgery for your liposuction needs, non-invasive tight bodies and all that stuff. So as you see, yes, the bad earnings happen because patients still can't go to their doctors, but we could see that these are potential buying moves. So you could see that is a buy at 23, 24. Can we see it go to 28 and 30, 33? Yes. So my view is more on a bullish side, both from the good stocks and from the bad stocks. Definitely Sea Limited, it's a buy pick for us. We like Shopee. I like Garena. Free Fire is, Free Fire. The mobile downloads has been more than 400 million. So just in COVID time. So that's really a significant mover. I would say that earnings call next week would probably be on the upside. Any drops of C Limited is actually gonna be limited to about 55 or 57. Any drops you wanna buy. So far, I really don't see any big problem. The fact that ZTO, this is your delivery company, going all-time highs. How could you tell me that Alibaba next week would actually disappoint, diba? Parang it's kind of no-brainer. Earnings next week for Alibaba, earnings next week for JD.com. Already, JD.com is hiring hundreds of thousands of workers. Even Kroger has, Kroger is a supermarket. They want to hire 100,000 workers. I would say the drops of Kroger here at about 30, 31 would be an entry opportunity. That said, all of these are expensive, but there's no company in the US in the right sector that is actually cheap. I mean, Amazon is expensive, Shopify is expensive, Mercado Libre is expensive, Ocado is expensive. When will I change my mind? When they all start falling down. Until you see Ocado, okay, so far we're seeing Ocado fall a bit. For the last 2 days, sure, it's falling. But can I buy at 1.8? I would want to buy on a pullback. So that's how I'll see it. So some people, yes, they would have sold some of their winners. You consider them winners because Mercado Libre at 777 is significantly above people's cost. These are all-time highs. So it's impossible for you to actually say that you're at a loss unless you just bought it at 777, waiting for more all-time highs. So as you could see, the dynamics of all these e-commerce names is that all-time highs after all-time highs after all-time highs. It's impossible for these companies to have significant resistances when there's nobody actually losing in those in those charts. Even for Zoom video, I understand this is hype. Mostly everyone's saying all the good news has been priced in. But until it is still above your 150, 160 levels, that uptrend is good to go higher. We never know what would be reported on June 2, but so far, any drops of Zoom will continue to be bought. So there's really no brainer in the USA. You could just say that the US, whatever you want to say, it's a secular bull market for e-commerce companies, for logistics and delivery companies, and for any company that's doing that has their business model in the right place, whether it's cloud infrastructure, whether it's IT solutions. So we don't just believe that it's correct. The contactless payments for PayPal will swear
Nikki,
go all-time highs following the move of PayPal possible. So there's
Nikki,
yeah. So cannot
can you
stop the trends.
can you discuss the Fanga? What
Yeah.
happened to those popular stocks before and
Okay,
Tesla?
for the Fanga, Facebook has that advertising problem because Facebook generally has Facebook, WhatsApp, Facebook and Google is an advertising revenue company still. So they have a lower chances of going all-time highs. But Facebook invested in Geo, which is an e-commerce play in India, and helping them on payments. So I think Facebook is recovering faster than expected. That Geo was here at about 100. That news was here, sorry, here. The news was here April 21. So actually from 177, it rallied to all the way to 215. Yeah, there's no problem for Facebook, but Facebook versus Amazon, you'd know that Facebook has lower revenue on advertising side, even for Google. So that's why you see Google not going all-time highs yet. They're just recovering, but Google has been relying so much on advertising. YouTube relies on advertising. If a lot of companies are cutting their advertising budgets down to 50%, that would affect their revenues. Actually, Google warned their advertising revenues, but the stocks have been rising because Google also has cloud. So the thing about Facebook is that they're also transitioning not just so they have diversified bases. That's why we don't see them falling much. Now, it's impossible for Microsoft or Amazon to actually fail in this COVID world because actually Microsoft just reported an acquisition again. I think just last night, Microsoft bought another company. All that trillions of dollars enables them to keep on expanding in dominant fields, which is for Microsoft, that would be cloud. You know, if there's like Datadog doing 40, 50% in a week's time, Microsoft, owing to its $1 trillion market cap, has a difficulty to go 50% up. It's impossible, right? But that is because it's market cap based. So what we're seeing is that the smaller firms that are doing all the cloud-based infrastructure, all the edge, are going up with them. So I'm seeing that the companies in the right sector that are smaller are moving faster, which is common sense because Fafi is just a $2 billion company. Microsoft is a 1 trillion company, and it's a winner in the COVID world. So you've seen these moves. Will they continue higher? I would say yes. Any drops for the right companies would just be an opportunity to buy. Yeah, so you just have to analyze, is this company COVID proof or not? Because if it is, it's gonna be bought. And if it isn't, you have to check, okay, example, is Starbucks ready for a digital world? Yes. If the answer is yes, then you could buy it. Is Nike ready? The answer is also yes. So you have to just ask yourself if the company that are traditional is actually able to sell their retail goods online. And if they can, then it's a winner. That's
How
why we
about
are a contrarian buyer, Estee Lauder. Okay,
yeah?
what's
How
the
about
question?
Apple and Tesla? What do you think?
Um, I'm a Apple is being touted more for their software services, but I'm not quite a believer in it. So I don't read much on Apple news. For Tesla, a lot of analysts would tell you that this is overvalued at $800. Most of the targets at about 400. But this one I think is more of a cult. So you couldn't actually say if it will fall to about 600, but it hasn't. It has more of a cult effect. So yeah, it's not standpoint. It's more of people buying it due to an innovation. Um, not about it's not about deliveries of cars either. So it's yeah, it's a bit speculative to be honest.
Okay, thank you.
Okay, so that's it. Thank you guys and see you again next week. To end the presentation, I just want you to study the companies that you want to own and definitely just find COVID-proof companies. You'll do well even in a COVID pandemic. Thank you so much. Bye-bye.